Hey guys, welcome back to another episode of the Money Codes. You can see on the screen I'm on self.inc. Good old self. So now somebody called me out on this. I did a video on self. Specifically, it was self versus kickoff. Did that I think about 2 years ago. Someone went into the comments and said, I haven't really touched on self at all in about 2 years. And that's a good point. And I've been doing a little bit of research. So what I'm going to do on this episode, I want to kind of take a step back, because if you remember, the last video I posted was about the advantages of business credit, how we can get up to 100, 150 and above in unsecured financing and business line of credit. We went over all that. And self, right? Self is very popular. Many of you guys have already heard of them and maybe even used them, but I still want to go back and touch on it because, again, it's been too many years since I've touched on self. So who is self for? What's the pricing? How can it help your credit? Is it possible to get a 49-point increase like you see on the commercials and the advertisements? What's the breakdown? So let's talk about all that and more on this video. Ready for liftoff. Customers who make on-time payments can see an average credit score bump of 49 points, right? This is actually true. And if you watch the previous videos that I did on self, if your credit profile is thin and you don't have a lot of positive primary trade lines, and I don't mean authorized users, I mean a primary trade line, like something that has your first and last name on it, that reports to all three of the credit bureaus. Do you have something like that? But if you try to go to a lot of these big banks and start asking for unsecured credit cards, secure credit cards, different loan products, lines of credit, if they don't see anything reporting, if they don't see anything substantial on your credit profile that shows that you are a trustworthy person, they're not going to do business with you. So how is it possible to build your credit if you don't have any credit? That right there is one of the paradoxes that people have been, struggling with. How can you get credit if you don't have credit, but they won't give you credit if you don't have credit? So where do you start? So now scrolling down, you see it says 2 new ways to build credit. Build by saving. Now you can think of this as the traditional model of self, because before they came out with their credit card product, before they bought out this rent reporting service, and we're going to talk about that in a second, self was basically a way where if you had no credit, bad credit, and you wanted to start getting positive payment history, which we know is 35% of what makes up your score, you can go to self, sign up, and then every single month you can start getting positive payment history reporting with a self installment loan. That gets reported every single month, and that's how you start to get a better credit score, right? On the right-hand side, it says pay rent, get credit. Now, this is actually new. Matter of fact, I think when I did my video on self 2 years ago, the newest thing was their secured card. That was like the new thing that they had. And it looks like they bought out one of the more popular rent reporting services, Level Credit. Matter of fact, if we go over to the website here, but if I zoom in, you see Level Credit powered by self. Powered by self. That's dope. I didn't know about that. So if you want to go ahead, in addition to doing the traditional model, which I'm going to break down for you guys, which is getting that installment loan, right? Paying every single month, then getting the secured card, and then on top of that, signing up through Level Credit, and then now you're able to get your rent payments and your utility payments being able to get reported to the credit bureaus. That's pretty good. That's pretty good. So self is doing a lot of work, but it's not always, sunshines and rainbows. I'm seeing a lot of controversy. I'm seeing there are some people that are having issues with self about how they are reporting to the bureaus. I don't know about that. If you guys have experience with that, if you signed up with self and they didn't report your payments correctly or didn't report your history correctly, let me know. It's not what I experienced personally or the people that I actually refer to. But again, people change, things change. You got to let me know on that. So how does it work? Build credit while saving money, starting at $25 per month. So the basic plan is $25. I'm going to show you what that covers. Features: no hard pull. If your credit bureaus are frozen, specifically your TransUnion personal credit profile, if you have it locked right now, it's best to go ahead and unlock it, then go ahead and do the sign up process with self, right? You're not going to get a hard inquiry. There will be no hard inquiry, but you got to make sure that your TransUnion personal credit profile is open. All right, you automate your payments, track the score. They're going to report to all 3 of the credit bureaus, and you can cancel at any time. So now let's look at the cost. Now, I like how they did this. Now they've changed this and they made it more transparent, because back in the day, and you can see in the old video, they didn't really show you the upfront cost as easily. At least how I remembered. So, okay, we have the small builder. Every single month, $25 you're going to spend, right? Now, again, for the people that are new who really don't understand this concept, because this is a credit builder and they're going to be reporting an installment loan on your credit reports, you're not going to be getting a loan from Self. Every time you spend your money with Self, $25, $25, that money is going to be basically locked in a certificate of deposit, a CD, and it's just going to be locked away. After you pay every single month, remember the reason why you're paying every single month isn't to get money to spend, is so that Self can take their Self trade line and report it every single month on your credit report. Now, what are the fees? Let's zoom in. If I sign up for 2 years and every single month, 25, 25, 25, 25. At the end of 24 months, I would have spent a total of $600. Remember, at the end of the term, we get our money back minus the admin fee and minus the fees that they talk about and the interest and all that stuff, right? So what that means is for the small builder, 25 months, you're doing it for 2 years, you're going to spend $600, you're going to get back $520, and basically you had to pay Self $89, right? This final cost is what goes to Self. Considering their circumstance, considering that most people who are going to be signing up for this are people who don't have a lot of options as far as how they can start to, build their credit profile. To me, that's pretty solid, right? So then you have the medium plan, $35 per month. For 24 months, you get back a little bit more. The large builder plan, 48 months for 24 months, you want to get back a little bit more. Now you're going to get $992. The extra large builder plan, now this one is also new. I didn't notice this when I did my first review, but $150 per month. For 24 months, you want to pay a total of $3,600 over 2 years, and then you're going to get back $3,076, which means Self is going to get $533. What's the difference here? And we can look at the interest rates and the APR. The amount that they're going to report to your credit report changes depending on the tier. If you guys remember, I did a video, Self versus Credit Strong. Credit Strong at that time had what they called their Magnum plan, where I think you had to pay $199 per month or $299. I forget how much I paid because I actually bought it, did it for I think like a year or two, and then recorded it for you guys to see. But when you start doing these larger ones, the amount of the installment loan is going to be bigger. Like, why does that matter? Is it going to help your 3-digit FICO more this way? Not necessarily, because remember, when we look at that little image that I always show you with 35, 30, 15, 10, 10, you have your utilization, you have your payment history, you have your credit mix, you have all these things that make up your credit score. If a real life human being underwriter looked at a credit profile and is looking at your credit reports, your credit report is going to tell a story. If all of the trade lines and all of the credit cards you have are like super baby balances, so say for example you have 3 credit cards, one with Macy's, one with Victoria's Secret, and one with whoever, and you have a credit limit of $500. Then you try to go to Chase and you try to ask Chase for a $10,000 Chase Sapphire Preferred. They're going to look at your credit profile and see like, wait a second, we have the Chase Sapphire Preferred, and this person over here whose biggest credit card is a Victoria's Secret card for $500. Chase Sapphire Preferred, Victoria's Secret, they're not equal. They're not even in the same vicinity as far as like the type of credit card product. Banks want to see something similar that you're trying to apply for. The same thing also applies to the type of loans that we apply for. If all of your loans are just like super baby $500 loans, $300 loans, compare that to somebody that has on their credit report 2 mortgages that they paid off in their lifetime, 2 auto loans that they paid off or paid down. That person looks more responsible. That person looks like they're able to take care of bigger debt. So although you may not see a 3-digit FICO score difference between the small builder or the large builder, right? You're not going to get like 15 extra credit points. But if your long-term plan is you want to borrow large sums of money later on in the future, it would be better to have larger installment loans reported. It would be better to have larger credit limits on your unsecured credit cards reported. That's basically how all this works. Hopefully that makes sense. But for 95% of you guys, The small builder, that $25 a month, you pay $89 basically over the course of 2 years. You get $520 back. I think this is going to be probably the best product. Remember, we're using all this. This is all a means to an end. We're doing that to get more positive payment history reporting. That way we can take advantage of the big plays later on. When I talk about going to US Bank, when I talk about going to Truist, when I talk about going to certain institutions, you got to get your stuff on point first. So we use these type of credit builder accounts in order for us to start getting secured credit cards with other banks, to start getting unsecured credit cards with other banks, to start getting business line of credit with other banks. It's a stepping stone. Don't sign up for Self or Credit Strong or any one of these credit building products if you're not going to do it for the duration of the full 24 months. Like if you know that you're cash strapped right now, you know that your funds are tight, a lot of you guys aren't able to keep track of all these accounts. In the same way Self is going to report an on-time payment, they're also going to report if you don't pay on time. If you miss a month, if you miss a payment, that negative payment history is going to basically destroy the entire purpose of doing this. You can cancel at any time, right? You can cancel at any time. But again, the whole point of getting these Self products is so you can keep them for as long as possible. And then you can get 24 on-time payments added onto your credit reports. That's the point. This is not going to work if you sign up for 3 months and then stop. It's not going to work. That's not enough weight. You're not going to get enough weight in 3 months. Commit to the full 24 months. No credit history needed. As I said before, if your credit is messed up, if your credit is challenged, if you have no credit, this is where Self is going to help you. Now, this is just an example of once you have the app, what it's going to look like. And then you can kind of see your progress over time, right? Let's look at the credit card because there's been some changes to this as well. So now how does this one work? So remember, after you pay 25, 25, 25, 25, or if you're paying 35 or whatever the amounts was, once you get $100 paid into your Self account, you can basically take that $100, or I think it might be $125. I think it's $125 because there's a $25 annual fee for their secured card. So once you have your $125 in your account, inside of the app, you can basically set it up like, yes, sign me up for the Self credit card, the Self secured credit card. Now, what does it look like? I actually have one because I wanted to demo this for you guys back when I did my first review. Guys, make sure you have something like this. Have a few of these. Make sure you have all of your cards. Make sure you guys have apps on your phone that are going to remind you of certain dates when you have to pay for certain things. Get on auto pay, right? Do the fundamentals because it's going to work. But this right here is the Self card, right? This is what it looks like. So again, once you have that $100 there, and you can probably get that in 4 months, go into the app, tell them, hey, I want the Self secured credit card. They're going to mail this out to you, and that $100 that you've been paying into Self, that's going to be your new credit limit on your secured card, right? So now you have your installment loan reporting every single month. Then you're going to have your secured card reporting every single month. So now you have basically 2 on-time payments that are going to be reporting every single month. That's the whole benefit of Self. That's why they're in existence, why they're popular, right? Now, what is the possible downside of having a $100 credit limit card? If you're still watching, go down in the comments. You tell me what would be the potential negative, the potential red flag, the potential thing that might screw me up if I have a secured card with a credit limit of $100. The answer to that is if you have a secured card and it only has $100 as a limit, the moment that you take the card and you go to a restaurant and you spend 30, 40, 50 bucks, you tell them to swipe it on your Self card, now you're at a 50% utilization because it doesn't take much to fill up the utilization. If you have only a $100 credit limit or only a $125 credit limit, the only thing that should be put on this is nothing over $10, $20. This is the reason, guys, why I always emphasize the fundamentals. Because if you heard me for 2 years say utilization, once you hear me say that over and over in all of my videos for 2+ years, it's to save you the headache of having And installment loan reporting, oh, cool, I have a credit card now. I have a secured card. And then now you're maxing out your utilization. You're not going to get all the points. Matter of fact, it's probably going to negatively impact your credit profile as well as your credit score. So guys, if you guys decide to sign up and get this card, pay attention to whatever your credit limit is. Make sure to never go above 30% and ideally 1 to 9%. That's where we want to stay. I have the card. It reported to all the bureaus. I didn't see or notice any inconsistency on how they reported or when they reported. They just reported. Right now they have a B rating, right? I am hearing people say that they're not getting self, and I don't know if it's the installment portion or if it's the secured card. I don't know all the details. So again, guys, if you have these accounts and you're experiencing something and it's not what you signed up for, or they're not reporting the way it's supposed to be, go down in the comments, use things like the Better Business Bureau. But right now they're still at a B rating, right? They're still at a B rating. So me personally, if I haven't run into a problem myself, or a lot of you guys have signed up through my link, when I get on the phone with you guys, I'm seeing it report the way it's supposed to. So again, if you guys have signed up for this and it's not reporting the way it's supposed to, or if you're having any problems, please go down in the comment and let that be known so we can kind of learn from this. All right, so can I pay my self-loan off early? We already touched on this. You're not going to get all the credit. You're not going to get all the juice. If you sign up for this, keep it for the 2 years. So in order to get this card, you have to have a credit builder account. You have to have made 3 monthly payments on time. You have to have $100 or more in the saving progress, not including interest. And then you have to have an account in good standing. So I pretty much covered that. Another thing that I noticed was after about 6 months, and again, it's on a case-by-case basis, probably going to be looking at other things on the credit profile, but there is an option if you end up getting this card where it will go ahead and graduate if they go ahead and accept that. Again, guys, if you have more experience on that, let me know. I think that'll be beneficial for the community. So that's pretty much it. That is Self in a nutshell. Who do I think it's for? So in my opinion, I think Self is legit. Like I said, I had the account, I had the credit card. I didn't really use the card much. I just got it just so I can show it to you guys on YouTube. So yeah, if your credit is not good, if you're rebuilding, Self is still in 2023. They are still a legitimate option. Are they the best option for this? No. If you have Navy Federal, you already know at this point about the pledge loan. It's going to do basically the same thing minus the fees. So if you're doing the pledge loan, you put down $1,000, you wait a while, and then you pay off 90%, 95%. So now you're sitting with a balance of $100, $50, and now you're only having to pay interest on the $50 remaining balance that you have with Navy Federal. You're going to be paying less with Navy Federal pledge loan compared to Self. It is what it is, but there still is value here. Matter of fact, and I'll probably do a separate video on this. DCU has, DCU has a credit builder loan, and the APR is as low as 5% for 24 months. So again, you have DCU, you have Navy Federal Pledge, and I will always tell you guys, if you had the choice, not everybody's able to get into some of these credit unions. If you're not able to, then you get a Self, because it's going to work. Just know that you're going to have to pay a little bit of fees. If you're cool with the fee breakdown, you're good to go. If you do have a membership with Navy Federal, it makes more sense. Not only are you going to be using your own money to fund the pledge loan, you're going to get that back, right? Now you're building a relationship with a financial institution. Now you go back to Navy Federal, and then you ask for the N Rewards card. Then you can start getting the Platinum card, the Cash Rewards card. Then at that point, you're still building a relationship with Navy Federal. Then you can go ahead and open up a business account with Navy Federal, then get their business credit card, right? The reason why it's better to deal with a credit union and a bank to do something like this is because after the 24 months, you've now had like a real relationship with the bank, with the credit union. Now you can start asking for more money. Business line of credit, personal line of credit, unsecured credit cards, term loans, whatever it is you're trying to do. They saw that you were paying on time for 24 months. They're like, okay, cool, you're trustworthy. Now I'll give you a $10,000 credit card or a $15,000 credit card. Now you're building a relationship with a bank and a credit union that you can continue to tap year after year and just continue to apply for whatever you need. Self is still legit. Guys, make sure to go down in the comments, like, subscribe, share your thoughts. We are approaching 10,000 subscribers And that is it, guys. I'll see you in the next video. Have a blessed one. Peace.